Okay, thanks for your patience, guys. Good evening. It's Ken at Tortoise Capital. This is the nightly strategy podcast for July 14th, 2020. Let's just jump right into it. So yesterday, Monday, we had this feature. We had a large gap up. Pushed to a new 10-day high, and then sold off sharply. Today, the weakness continued. It gapped down, and then sold off all the way to the Bollinger Band mean and just out of the dragon. Held support here at the low of the day at about 312 and the Bollinger Band mean. And then had a pretty strong day the rest of the day and powered through to get back through the dragon past Z1 and closed above the 10-period regression line, which is sloping up, and it caused the RL10, the moving RL10, which is still in the summer, to reverse up also. So that was a pretty favorable recovery today. I take that as a positive sign. You notice the volatility of the last 10 days has begun to shrink. In fact, it's going to shrink a lot more when today's 10-day low, which was 10 days ago, reverts back to about 310. So that's going to make this next 10-day period very tightly compressed. So you're going to see the width of the dragon similarly get very narrow. And this is going to act as a forcing function to keep wanting to push this price higher or risking a collapse. So that's going to be an important feature of tomorrow, is that the new 10-day high is going to be about 310. Okay. You'll notice that the slope of the dragon, the slope of the dragon, is now steeply up. The dragon extension is really strong. The RL30 extension, which had been flat, has now reversed back up and is now shaping up. That's very good. The PSAR, which flipped about seven days ago, has now been steadily marching north, and the extension is also pointing up. That's very favorable. The PSAR support level is at 308. The Z1 support level, and which is now also the dragon belly, is here at 308. Or I'm sorry, 306. The 10-day low was 303.85 and is now going to move up, like I said, to about 310 tomorrow. The long-term fair value is down here by Z-1. So that just tells you the magnitude of this move from this low ground here all the way up, all the way up to the high ground is really favorable. And we have the Z2 and the long-term fair value down here at 300 even, providing strong long-term support. That's just a measure of how far we've come, almost 8% off this low, all the way up to the top here. So with today's close here, we've got some support levels at the RL10 price, the Z1, the skin of the dragon at 316, the dragon peak, the previous dragon peak over here at 316.74. Spine of the dragon, skin of the dragon at 313. And then Bollinger Band mean at 312. I consider that to be really strong and important support right there. So if it can hold above the Z1 at 317.5, then we got a really good shot at getting through the RL10 peak, the high of the day at about 320, and then to go test this cluster up here, the 10-day high, which is at 323. Made yesterday, and then the RL90 and the Z2 price levels, 323 and a quarter. And then the 30-day high in the previous RL10 peak at 323.50. And then from there, it's all free and clear to the peak RL270 long-term fair value at 324.84. So that really is in real striking range right now, based on that strong recovery. Okay, so cautiously optimistic. This was a strong vote up. It could very easily, this from that opening, this thing could very easily, that's the size of the move. That could very easily have been a move down to test the 10-day low, but it didn't, and it moved up. So if we can get the same kind of a move tomorrow, where would that take us? Well off the up to about 326. So that was today. That was a move of about $8. So if we can get eight more dollars here, that takes us to 327, which would take us all the way up to the top of the chart. That would be an amazing move. So cautiously optimistic. Let's see what worked today. All right, so we have the S&P here at plus 1.3. The Russell at 1.66, favorable, and then the Dow all the way up here at plus 2%. So quite an extraordinary move in the large caps. So the S&P was the baseline at 1.3. The Russell 2000 at 1.6, and then diamonds at 2.1. What were the sectors that contributed to that? Well, first we're going to notice, let's see, healthcare at basically 2%, materials at 2.5. That was a big story today. Brazil 2.6, energy huge 3.5. Oil exploration at 4.25. And now let's just see the companies that contributed to that. You notice the tech was just a fraction lower than the S&P, but the tech that was better today was Tesla at 1.3, continuing to amaze. Apple at 1.65, Twitter at 1.71. Virgin Galactic got some bailout money today from Great Britain at 1.8. Walmart at 1.9, Brazil 2.5, and then all of the material companies. Let's take a look at those. We've got Nucor Steel 2.75. Wheaton turned in a nice day to overcome yesterday's anomaly at 4%. Devon Energy 4.6, Cliff at 6.2, U.S. Steel at 7, and Alcoa at basically 9.6%. So big move in the metals all day. Alcoa was just the most orderly, smoothest thing you ever wanted to see today. Traded free and easy in that one. And what was worse than the S&P, you ask? Well, let's go look. So tech was a fraction lower at 1.15, Mexico 1.06, consumer discretionary at 1% even, Japan 0.8. Here's some tech leaders. Microsoft 0.6, Google 0.6, Facebook 0.3, Amazon minus 0.6. So some of traditional techs were suffering today. Wouldn't surprise me to see them build on today's gains in material and energy, the beaten down sectors, to see tech kind of resume on a broad move in the market like that. That would be something we certainly want to look at tomorrow. Let's see if Alex is in here tonight. So there was a question asked of me, hey Ken, how do you find targets for the day trade? I got a little whiny about that. But this is how. What I'm looking for are that interplay of markets and sectors and companies, and looking for things that have a reason to have a larger than normal move tomorrow. So let's keep in mind these things that I'm talking about. I'm going to cover the a kata slide on that here shortly. So the tech lagged a little bit. Tech leaders like Microsoft, Google, Facebook, and Amazon were a little bit less. Finance sector was up, but not as strong as the broad market at 0.5. Well, I saw a lot of talk about the big banks on Bloomberg all day today. Guys in there from Morgan Stanley, JP Morgan, and various hedge funds talking their book about how the large banks have been lagging and are postured for real success. That just means they've got a full position on that they're looking to start selling to people. But if that's the public face of it, it's finance has not returned that rebound the same way energy has, and so the same very strong move over the last 3 days that we've seen in energy could then cycle over to XLF next. So that's going to be on my mind for tomorrow. Treasuries finished in the green at 0.14 along with emerging markets. And then in the red today, Amazon minus 0.6, Nikola Motors minus 1.5, Win minus 2.4, Simon Property Group minus 2.76, and then VIX minus 5.8. So the big winners today, all the metals, materials, and energy, and I would say also Brazil. Now the defensive play of Wheaton is a nice one there that built on silver's strength yesterday, so it had quite a nice move today. So the question was asked of me, how do I find symbols for day trading? In one page I would put it this way. The first thing to make note of is whatever symbol I pick my planning has to come up with a list of things, right? So that's what the plan is, the review of the daily trading plan. That's how I find them. More importantly, the preparation of those targets. The planning is about 10%. The preparation is about 80%, right? And so there is standard work to prepare each frame. That's got to be done. And that means answering those questions on the trade frame process. There's about a dozen questions that causes you to do some visual work. And then once I've made all the trade frames from those symbols that were on the prep list, then I'm going to do standard work to make a logic chain so that I can tie together scenarios for the markets and the sectors and the targets so that I can have a visual rehearsal of the day that I could experience tomorrow. So that's standard work, making the logic chain each day. So the daily report that I'm getting ready to go through again is a rich source of signals. What I want to emphasize is that the daily report really is a report of the symbols that I've picked and put in my herd to manage. I'm going to be an expert on my herd. I've taken a subset of the broader market, and I'm going to specialize in those little 50 or 60 symbols that I specialize in. And what I'm looking for from my herd by observing them carefully and watching them all every day through common lens, I'm going to come up with 3 categories of targets for day trading tomorrow. Now, those of you that have studied the daily trading plan video, this should be a rehearsal, a review for you. So there's 3 categories of targets for day trading tomorrow. The first one is continuations. So anything that I traded today, or anything that I've even studied today, even if I didn't take a trade in it, but I was stalking it and studying it or whatever, it could have been something you traded, and I was looking at the chart. So anything that I've studied from today's live trade is a continuation pattern. And why is that a category for new symbols? Because I'm already connected to it. I've already invested in the key price levels and got a sense of it. I'm read on to the plan. Continuations are one category. The next category is going to be new signals. And these are either going to be mechanical signals from swing trades or some of these strategies where I'm looking at different techniques like the max pain range compression or the RLFF or the auto framer or the pinch and stretch, the NDX, anything that looks like a new signal from either a mechanical swing or one of these strategies is going to become a candidate for prepping. And why? Because these are all things that are in a critical state. And what does a critical state mean? A critical state means that it has a higher probability than normal of making a larger move than normal in either direction in a short period of time. So that's a critical state. And then the third category is going to be all the usual suspects. And these are the ones that are consistent movers. And what are those? Well, those are things that are high volatility and high volume and are frog champions. They are very directional on swing trading and they're very directional for intraday. So from those 3 categories, I'm going to be finding a set of symbols that I can prepare. And those symbols all come from my particular herd. Now, that's just the way I do it. If you've got the TC2000 bundle and you really prefer one particular strategy or one particular signal or system, you can scan from 5,000 symbols just for those patterns. I don't do that. I concentrate just on about 50 or 60 symbols and specialize in about a dozen systems and strategies. So that's really, call it 50 symbols times 10 systems/strategies. That gives me 500 opportunities to generate signals. So if something fires as a signal on one of those 3 categories, what that really means is that it has a yellow zone that I really like, and preferably it's a small range. So in the yellow zone tomorrow, what I want to see is I want it to open inside yesterday's range. Sorry. There we go. Ah, for crying out loud. Sorry about that. Not sure why that's not. The pen's not working. So let's suppose that box represents yesterday's, or in this case today's price range. That means that the yellow zone is yesterday's range, today's range, I should say, plus or minus a nickel. And then the area to the north of that, if it makes a price move greater than that, that's going to be into the green zone. And in the green zone, I want to be long. But if it breaks down below that, it's going to be in the red zone. And then I want to be short in the red zone. So if it breaks out of the yellow zone across my mechanical entry to the south, then I want to be short in the red zone. And if it opens inside the yellow zone and breaks above the high plus a nickel, I'm into the green zone and I want to be long. And so that means I've got to frame a trade in both directions by answering all those questions. And I set targets for gains to the upside and targets for losses to the downside. And I'm basically going to use the yellow zone as the unit of risk for swing trading one day at a time. Now it may, and that's what I could do just on a mechanical basis as a swing trader using end of day data. And I can frame all those trades, and then I can set those entry levels as alerts. And then if price opens inside the yellow box and goes through one of those alerts, the system has found the mover for me. And then I can be long, or I could be short. Now there's a special case of day trading in which I may be able to trade inside the yellow zone itself. So if I'm going to trade inside the yellow zone, it can only be because I've seen, maybe it is open near the bottom of the yellow zone and then starts moving up. And now I can set my mechanical entry as a price target. And if I can see 2-to-1 with the minimum manageable risk box, I can make this trade intraday. Maybe that's my minimum manageable risk box. And now I've got 1, 2, maybe even 3. I don't need 3, but all I need is 2. But if I can get 2 manageable risk box to the upside, then I can take a intraday trade with a turbo position. And then if it goes through that mechanical entry, then I can be long here. Or if it goes short, I can be short if it opens the other way, where maybe it opens perhaps near the high of the day, and then starts moving south, and then I can trade on a 2-to-1 basis, and try to front run the breakdown of yesterday's support level. So it's really important to respect the power of yesterday's high and yesterday's low. That's how high they could move it yesterday, and that's how low they could push it yesterday. So if today's price is going to break down through there, then that means the bears are winning, or conversely, that means the bulls are winning, and it's new money coming in, or new psychology, and now we can expect it has a chance to go to those targets that we mapped out above. So the trade inside the yellow zone is a function of my minimum manageable risk box, and is it wide enough that I can actually see some trades? If it's not, I can just wait for it to take my mechanical entry, and then I can pick up the trade and go that way. That's why I'm interested in all these signals that came out of continuation patterns. I'm very interested in these signals that come out of continuation patterns that I've already got a feel for what's going on, and the new signals that tell me that this price ended up in a critical state, and all the usual suspects which have some kind of reliability for volatility and volume. So in a nutshell, this green, yellow, red approach helps me gain a directional bias, starting with the market, and then looking at the sectors, and then looking at the particular targets that I may have framed out. So that's the general lens of what I'm looking for to shape the trade for the day ahead. And then these are the categories of the things that I'm going to prepare a trade frame for. Now, when I prepare that standard trade frame, I answer the questions of that trading process. And this is standard work. For each one of those symbols, I'm going to answer the questions in order to frame it. And those questions cause me to consider the multi-time frame, multi-lens analysis. That means I'm looking at MACD 4 seasons, the RLCO Bollinger Band framework and those patterns. I'm looking at the RLFF, regression line fractal framework. I'm looking at the pinch and stretch. I'm looking at support and resistance. I'm considering all of those factors, all 5 of those lenses, in order to answer the questions about where could it go and where might it stop. When I get done applying that multi-time frame, multi-lens analysis, I no longer have a directional bias because I've been able to systematically look at this thing in the yellow zone and the green zone and the red zone and mapped out all the different price levels in exactly the same way that I just did the S&P. I took a look at all of those frameworks when I went through that assessment of SPY in order to get the market correct. We're going to see that this thing is significantly overbought and that technology and now materials are overbought, but finance is oversold as sectors. So anything that is significantly overbought or oversold on an NDX basis, especially the 10-day NDX, is in a posture to make a larger than normal move because it's at an extreme. As long as it's stuck here in the middle between 80 and 20 on the NDX, it's just normal volatility. But if it's overbought, then there's a real good chance that any move to the upside could be amazing. And any move out of oversold to the downside could be amazing. And in the same way, from the oversold condition, this thing could go down large or up large. So there's a very good idea in here about why you want to pay attention to things that are overbought or things that are oversold. And the NDX is a simple way to do that. If they're stuck in the middle of all this, it's just business as normal. There's nothing exceptional about it. That doesn't mean it won't make a big move, but I'd rather stack all the odds in my favor by studying those members of the herd, I want to look at those members of the herd that are giving me a signal. One of those signals, the powerful signal of being overbought and oversold, is really powerful. So now, if I've got a market that is overbought and a sector that's overbought and a company that's overbought, well, now the possibility for that target to be extraordinary is even greater than normal. Well, that's a working definition of a critical state. So if I can stack all of those advantages up in one symbol, I would love to see a market that's overbought and a sector that's overbought and then a symbol that's overbought, because I'm pretty sure that that's going to be the subject of intense scrutiny tomorrow. So that's how you find them. That's how you find them. Well, what do you do with them when you find them? You do these things. You conduct a standard trade frame. You answer all the questions on that trade process, which makes you consider those lenses. You leave that without a directional bias, because you realize, yeah, this thing really can go large in either direction. So the trade frame gives me a clear plan to manage price in both directions. And I can just follow the price and do as I'm told. I'm going to at least identify mechanical entries, such as taking out yesterday's high or low, or maybe breaking through the hump of the dragon or the belly of the dragon, because that's a conditional response right there. That's a collapsing dragon or an emerging dragon. So I may be able to mark those out. If it was a pinch, which I figured out from one of the lenses, the pinch and stretch, if it's a super pinch or a Z3 pinch, then I know that a breakout from a Z3 is an automatic entry. It may be that the pattern that I see from the RLCO framework, or the four seasons of MACD, it may be a supported spring crossing, which gives me an automatic entry. So I can mark off those mechanical entries either as an actual order in the book, so it puts me in, or maybe it just, I set it as an alert because maybe I want to take one final human in the loop confirmation. So when I go through that standard trade framing, I've identified all my opportunities. I've taken a look at today's price action and come up with my minimum manageable risk box, or my PSAR flip box from kata number 2, that little 30-minute Z3 box. So I have some box that I'm going to use in order to shape the turbo trade for tomorrow. All of these processes right here, standard work, these processes prepare you to find the mover, so that when it breaks out and starts moving, you can get on it. So how do you pull all of those individual trade frames together? So if I did one of these trade frames for one of the members of the herd that gave me a signal, and I mapped out all of those price levels and so forth, so maybe I have a dozen individual trade frames. Well, I'm going to put those in a collection of those together, and then make a logic chain that allows me to link together different scenarios and combinations, and that is my actual rehearsal for tomorrow. Hey, what if this overbought market continues to go up? What am I going to do? Well, I'm going to go look at my trade frames for the ones that are also overbought and moving up, and I'm going to find the mover in the sectors and the targets, and then get on the one that's moving the best. I'm going to take that whole stack of things I look at that I have prepared, and the thing that's moving up right now the most is my target. And I just work my way down the list until I find something that I can trade. And then my trade management skills, my process for managing my little units of risk, the 4 bullets, my little poker chips, my span of control. How many can I take at once? That governs how many I'm going to be in at any one time. So I make the price compel me to take the trade. I'm not just trying to see if it's going to work. It's working. And I'm putting the money on the ones that are working the easiest to see. I'm not taking shortcuts on them. You got plenty of opportunities. So that's how you find symbols for day trading. And that's about finding them is 10%. 80% is doing the work to prepare the trade and then assemble the logic chain and then build the rehearsal and so that you are not surprised tomorrow by whatever it does. Now, if you go to the tortoisecapital.net homepage, right in the middle is a 15-minute picture of how I have mapped my own process that I just described here. It shows you a flow chart of the steps I go through by sequence with a voiceover. And just like the 2-hour battle drill, you should listen to that every day for 30 days. And then I organize the time of the day in 30-minute chunks. And you'll see a video on that same homepage right below that one, which shows you how I organize my day in 30-minute chunks so that I can manage all of these scenarios in 30-minute chunks and keep track of time as it passes during the day to find the movers and discover the themes as the day begins to unfold. It's less theoretical and much more practical. So that's a kata, or a process of how to find, prepare, rehearse, and manage symbols for day trading. So let's do that now. Let's go through the daily report, and we'll go back to the charts. Now, we're going to start, and we're just going to go in the way we always go, and that is I'm going to take a look at the trades that I was already in today. Why? Because they're already working, and I'm going to start with continuations. I'm already connected to these. So a lot of my job is already done. So let's look at the trades that were taken today. Here's one on the micro DIA, and this is a 30-minute kata. So I think this is Neil. Is that correct, Neil? Is this you? If you want me to call out your name, put your name in here so I can remember. This may have been Neil. No, not Neil. It's somebody else trading the micro. So he's on the 30-minute. Now you'll notice here's where that market is opening, right here at like 9:30 Eastern, and he's got his little yellow box, which was the previous day's Z3 pinch, and so he brackets the trade, and now he gets an entry here when it breaks out above the dragon, and he's picking the PSAR. No, I'm sorry. He was using this box, and this thing moves through. He gets his entry here, managing it with. You could manage it with anything you want. You could manage it with his with the PSAR dot. He decided to use a sniper exit and just cash his 1R so he could spend time with his boss, and it was a very relaxed and an orderly play. There was another scoop just as large, and then you're going to notice if we look at the PSAR dot that lags one at a supported fall crossing here or winter crossing here, and this this 2 scoops that you get here, he'd have picked up those 2 as well. So he got the one that he wanted, but just to notice there's 1, 2, and 3 more of those moves in a very orderly fashion on a 30-minute bar. There's the awesome Aussie Ninja bringing home 7. He's still working on a consistent MMRB. So go ahead. Yeah. Oh, yeah. Robert, that's right. I was trying to remember. Thank you. That was well done, by the way. Here's Luke, our Aussie Ninja. He's color coded the dots of the PSAR by season, so he can shrink the size of the screen real estate to just a fraction in order to see what he wants to see. Good standard practice. I guess that's his wrist box here. Excuse me. He's on 1 minute, and this is in Mexico. He gets short on that feels like another, like 2 full boxes of movement from here, from the open, 2 full boxes, or maybe that whole thing is 1 box and he was straddling the open with it. That's probably what it is. And then he's just taken a half of that box as his risk. And then he's just taken the PSAR and cashes at the supported spring crossing, enters at the supported spring crossing, makes bank all the way up here after he sees the far side of the hill. He adds a second position when it clears the Z3 and the high of the day so far. So good place to add a second position. And I wouldn't be offended if you took that as a sniper exit and then this is the Bollinger Band mean exit, but take it all at the sniper. That's awesome. Supported fall crossing. Notice he's in the fall. It's collapsed down, and it had a chance right here to break and resume, but it didn't. It rolled over. Short, makes a nice supported spring crossing exit. I like the fact, now notice what he's, by adding that extra box and asking for some confirmation, he didn't get, along here and then have to short. I guess he's waiting for the confirmation, which is fine, and he gets a collapsing dragon here. So when this collapses, bang, and cover. And that's how you do 7R in Mexico on 1 minute charts in 3 hours. Now, I was down at the dealership today working on getting my car fixed so we can sell it. So I was trading from a tablet with a pen. So this is more of a Monet style of the French impressionist marking up because I didn't have my mouse. So this is Alcoa on 1 minute. Now, I want you to note that the whole metal sector was up strong today, right from the get-go. And the same pattern that we're going to see right here in Alcoa, it was the same pattern you're going to see in a second for U.S. Steel and Cliff Natural Resources. So here on this big blue vertical bar is the opening. So yesterday had a Z3 pinch of this magnitude from Z3 to Z3. So I carry that over into the day and I measure it from the bottom and it moves up and makes an SSC that was bigger than this and off the bottom. So I just buy the SSC in the usual way. And that whole thing was set up by yesterday's closing move, which gave a significant winter. And then today had a gap down sell off and then started to do a morning hook. And then the whole sector just took off. So nothing wrong with that. So from the bottom, I buy the supported spring crossing, and as it was crossing the Bollinger Band mean, I have my stop down here at the belly of the RL10. I leave that in place, and then jump it up here to the Bollinger Band mean by the time I put the second position on. Just trail it with the Bollinger Band mean, and as it's making a big hump and failing, I just sniper exit and take the whole thing. And then naturally, it bottom ticks, then gives me a second leg up, supported spring. This is a supported fall crossing because now we have a significant summer, fall, quick reversal. That's automatic. Automatic. Set up the same standard wrist box right here, jump it up to the Bollinger Band mean right here, and just trail the Bollinger Band mean all the way up, getting a second, third, fourth position in, never threatened by the Bollinger Band mean. So let's just count those, shall we? And I think, Neil, if I remember, you got this one today also. So there's 1, 2, 3. So 1, 2, 3, 4, 5, 6. So 6 on the first one. So probably 4, 3, and 2. So that's like 9. That's 15R on that second series. And then this one down here, that first series. So that goes 1, 2. So that's probably another. So that's about 18R just applying the Wu Wei exit, the Wu Wei exit management, and doing routine kata and just managing positions as we go, and then taking the sniper exit or Bollinger Band mean. That's just it. I mean, that's just it. Guy asked me today, hey, Ken, I got about 15 hours a week that I can study. Could I learn a system in the first month? Yeah, I think you can. I think if you spent 15 hours a week for 4 weeks in 1 month, I think you could learn one of our systems. That's the one right there, by the way. So this one is not as clean. This is Cleveland Cliffs. Or I'm sorry, Cleveland Cliffs. This is not as clean and easy as Alcoa, but you still get paid. So it has that Z3 pinch, which I bring over so I can calibrate the move off the low. What I like was this had a huge sell-off out of the Z3 and then recovered. So the first one was a scratch, then a re-entry gets about 1. Re-entry gets maybe a 2. Scratch. This one gets 1. And this one, so there's maybe 5 execution R in this little stack. Not as good as the 18 on Alcoa, but it's 5. And I just want you to notice how the afternoon sell-off, which came out of a Z3 pinch, and they sold it off sharply here, and then that caused a bunch of people to put in sell at open, and they came down and collected all their inventory. It's almost as if that was a plan. So I like to see the afternoon move of those things that closed poorly. Now, yesterday, all the metals got smashed, and this was the last defiant selling of a horrible sector. And guess what? Ownership changed hands, and off they go. So Cliffs Natural Resources in the metals portion of XLB. Alcoa was better than U.S. Steel. So this is U.S. Steel on 1 minute. Alcoa was much better. And this was not as good as Cleveland Cliffs. And so I ran out of will here going into lunch, and I missed the last move, and then I missed the the collapse here because I ran out of will. We were actually driving back from the dealership here, and I'm not going to trade in the car. So we had the Z3 pinch to establish the MMRB yesterday afternoon when everything, that's how noisy it is when there's no trading activity from Z3 to Z3. And how big is that, you ask? Well, let's go see. $0.06. So that's a 6-cent move off the, a directional move. Look at this. Oh, 6 cents off the low that was outside of the Z3. Buy it. Up, scratch it. Rebuy it. Fractional. So it's making those little chunky moves. There was just not much of a move in there. And I missed this second one, by the way. And then I took this one, and then I had a fractional loss. But I got 2 scoops in on this one. So this one was maybe 2. A couple are in there. So U.S. Steel was not as good as Cliff, and it was not as good as Alcoa. So all of the things being equal tomorrow, do you think I'm ready to trade Alcoa tomorrow? Yes, I am. That's how I find Alcoa, because it's in my herd, and that's what it did today. Energy sector was horribly oversold yesterday, and it sold off sharply into the close. And here was the MMRB. So yesterday's sell-off, you'll notice that I'm saying, yesterday's sell-off sets up a nice move for today. So I take the MMRB, which is this move, find the low of the day, and it gives me a gap down, and then winter crosses the baby dragon, changes to spring, supported spring entry. Here's my risk box down at the, I just picked the low of the day. Why not? How much is that risk? 30 cents. So I'm long at 35.35. I get out at 35.75. So that's 40 cents on one position. Execution risk and a half. Find support of the Bollinger Band mean. Summer, fall crossing, supported fall crossing. Bang at 35.80. This risk box is even less. This is about 15 cents. So it goes from 35.80 up to 36.10, so 30 cents. So that's 2 execution R. And just using the stop and then move up to the Bollinger Band mean and exit in the orderly way. So this was energy. XLE was vastly oversold on a swing sector, and this is just applying the routine SSC kata standard practice. So if I were to review, yesterday the market was in the middle in here, and energy and material were oversold. And what did they do today? Both of those went from oversold conditions. I'm not sure if they're overbought but out of the oversold condition, this thing that had sold off harshly down to overbought, now the sector took off, and then all of the targets in that sector also took off. And Alcoa gave a 10% move, while the sector gave about a 3.5% move, while the market gave a 1% move. Market was 1%, sector was 3.5%, Alcoa was 10%. So you ask me, why do I link together markets and sectors and stocks? That's why. Yeah, can't you just make a living, Ken, doing the SSC on the market? Yes, you can. You can specialize in that. But there might be a reason why you want to link together markets and sectors and targets. Here is a perfectly executed kata and beautifully marked up by Van Miller. Nicely done, sir. He's done us a service by mapping out his own flashcard. Now, Van, if that's not on the inside cover of your trading journal notebook, and that after you get done watching the 2-hour battle drill, you just watch that every day, I'd be surprised why you wouldn't do that. I think you should do that. We're going to take a vote in here. Everybody, does everybody think Van should paste that on the inside of his? Yes, they do. It was unanimous. So he's mapped out Kata 2, the 30-minute frame. The 30-minute frame. Using 30-minute charts, use target selection from your herd, find the most extreme movers that are also either extremely overbought or oversold in the NDX 10. Ta-da! Establish the PSAR flip box from the previous day, computing the distance between the PSAR dots, or I went from Z3 to Z3. You could also go from PSAR flip dot to PSAR flip dot. Same thing. Oh, here's what he did. From PSAR flip to PSAR flip. Bracket the opening with 2 PSAR flip boxes. Here's the open. So here's one north and here's one south. Go in the direction of the breakout with an initial stop at the current PSAR or RL10 max excursion. So it moved out. Bing! He's entering. He decided to use an initial stop of the low of the day. I like that idea because as long as that gap holds, it's going to go up. But if that gap cracks, it's going to rush down and join here. So there's no reason to stay any longer. So he gets an entry at like 154, probably 0.4. Call it 0.5, I don't care. And his stop is at 150. So he's got about a 50-cent risk box on this, and he's going to cash it $2.50 later. 5, okay, 4 with the sniper. Apply the sniper. He was, let's see, number 6. Apply the Wu Wei exit management process using the chosen skin of the dragon. In this case, he was probably using the belly of the dragon. Could have used the spine of the dragon. That's fine too. The chosen skin of the dragon as your manager, rather than the Bollinger Band mean, because you'd have only gotten to break even. So on the 30-minute chart, you use the dragon as your guide, one of those edges of the dragon based on the way the trade shapes out here. Apply sniper manager technique when you start to worry. It had sold off and sniper. Perfect. Don't carry a full position overnight. If you wanted to carry some of this position overnight, now he probably doesn't because of this sell-off. But if you want to carry, take 1/5 of the day trade, and now you have your 5-to-1 risk reduction. If successful, and it was successful, plan for a continuation tomorrow with the same position size and the same PSAR flip box, because you have standard architecture now on a trade that works. So don't change the geometry and the scaffolding. Now, if you wanted to, at the end of the day when you're framing it, you had some reasons, okay, use your own reasons, document them, and see how that works out for you. So bam. Ladies and gentlemen, the kata number 2, the 30-minute frame. Here's Bob Rourke my trading mentor and spirit guide. Is Bob in here tonight? So I can embarrass him. No, he's not. He'll listen to this later. Now, here's the chart he sent me. He also found the mover today. It was Caterpillar. So Caterpillar sold off. Now, I want you to just, I'm going to give you 1 minute to study this chart and make a note to yourself of all the things that you notice about Bob's beautiful chart that are noteworthy. So I'm going to give you 1 minute. Thirty seconds. And time. Ish. So here was my markup, and I marked it up saying, hey, here's Bob's 10-minute kata on cat, which he described in his email to me as a big fat cow going to market. So here's the things I notice. It's a 10-minute kata. So Bob's on 10 minutes, not 1 minute, not 30 minutes. It's just right in the middle. Now I'm going to come down here and notice that Bob's got a modification to his MACD 4 seasons. He's got another one down below this chart, but he's watching this one for tactical timing. He's using the standard, or I'm sorry, he's using a 430 MACD instead of a 1030, and he's using a 3-period moving average instead of 5 because he's looking at 10-minute charts. So he's modified it to a 4,30, 3 on his MACD, but it's the same principle. He's basically comparing the baby dragon to the river instead of the dragon to the river. So the dragon river is the 10 and 30. The 430 is basically the baby dragon and river. But it's the same principle. So I just noticed that he's using a different MACD, a modification, but same principle. And then he's got a tighter Bollinger Band river. Now what I do is I use a wide one that's 30,1. He's using this as a boundary and not as a seasonal indicator. So he's looking for things that, like when it crosses the river, the Red River, it's important to him. So he's using an 8-period instead of 30, but he's using it as a boundary and not as a Z-score indicator. So that's an important distinction. But the principle is the same, that the MACD got to a peak and then sold off harshly in the fall, came into the winter, remember, because the zero line is the winter. So it crossed into the winter, became a harsh winter. Then winter became spring, entered the Red River, departed, and off it goes. So right here at this transition from winter to spring and then entering his little Red River and exiting, right in here is where he's stalking it. He picks up the stalk right here. And then his exit, you'll notice, is like right in here. Or, I'm sorry, his entry is when that has officially passed through his version of the Red River, which is an 8-period and half a Bollinger. So it's almost the equivalent of the dragon up top. So it's like an RLXD in that sense. This is an MLXD. The MACD line crosses the dragon-ish. So summer, fall, winter, spring alert, and bing. Now I noticed down here that at the open, so it closed here, gap down, sold off. It got to a Z3 excursion and then reversed in that 10-minute bar. So he bought it with the low of the day as his risk box. And that is about $1 of risk. Actually, $1 of risk, 75 cents of risk. And he gets 1, 2, 3, 4, 5, 6 boxes of gains. I want you to notice that there was a possible second position here. So notice he's got the PSAR dots colored. That's what TC2000 bundle will do for you. And here's where the last red dot was, and then it PSAR flipped to here. So his little entry front ran that. But now notice when the PSAR flip occurs, you get a real confirmation of moving out. So if you were doing strictly supported spring crossing, you'd get an entry here. You would have given up 1 or 2 and possibly the first 3 boxes. So the Z3 excursion and reversal plus this little early warning was reason enough on the 10-minute chart to take that trade. I want you to notice that if you take that trailing PSAR technique where we said when the PSAR flips, if you had a trailing entry, stop entry, you could get this entry here instead of this one. So that's not bad. I'm noticing that. And then all he's doing is taking the PSAR, or maybe the skin of the dragon, but probably the PSAR. And then here, when things get dicey, his PSAR has caught up at the correct moment to protect. Now, when you've got this, at the time of his writing, he had his stop here at 133.94. So that was up let's see, $5 on 75-cent risk. That's 7R, 6R. By here it's 7R. Now this is a powerful vote up because it came into the station, didn't violate the PSAR, and then did a breakout back above the dragon, and off it goes for 1, 2, and then off it goes. So in my view, I think you could have had 1, 2, 3 positions in hand. This and that 7R or that 6R would have been 10R, which would fund this one, and then now you got 3 bags full going north. That ain't bad. That ain't bad. So do you think Bob and Van are going to be ready to trade Caterpillar tomorrow? Yes, they are. Why? Because that's a continuation pattern. Where do you find symbols for day trading? Continuation patterns, new signals from critical states from the daily trade, or the usual suspects, the frog champions. That's 10% of the challenge right there. 80% of the challenge is preparing them to find the mover using this kind of trade frame structure in either direction, taking that collection of trade frames, creating a market sector target logic chain, and then rehearsing the different combinations and understanding why those things can go large in either direction so that you have no directional bias. You're just following price. Dude, that is such an edge and will always be an edge. You know, do you know how many Robinhood investment accounts bought Tesla yesterday while they were going long Tesla yesterday while it sold off? 40,000 Robinhood investment accounts were day trading Tesla yesterday. And that's all kids in their 20s with no training. And I hope they don't turn out like that Navy medic that lost $1 million that he didn't have. but they're all grown men and women, and this is how you learn about life at some point. Well, you already know who the usual suspects are. I posted that flashcard again in the Patreon today, so you could see the list of symbols of frog champions. And you've seen half a dozen continuations, plus you have the ones that you may have traded today. So now all that's left is to go look at some new signals. So let's go look at some new signals. We've already seen the daily, so the daily market health check. So page one of the daily, very first thing I'm looking at. Oops, the upper half. Let's see if I remember how to do this. Well, I hadn't set this up for the editing yet, and because I'm working on my old-timey laptop, is the other one. Yeah, my next door neighbor and I were in the service together. He got out and became an IT specialist for the last 30 years, and we've been family friends for 30 years. He came over and tried to apply the last rights to my hard drive and raise it from the dead, but it's dead. So I took it down to my my partner's computer networking shop, and he's going to swap out a hard drive and then donate it to either a local business or a nonprofit. And then my new power machine should come in tomorrow. Excited about that. All right, so things I'm noticing. We're in bullish normal conditions. That's very good. I notice everything is drastically overbought. Drastically overbought. Oops. We are at 5.41%. Let me finish up this. Drastically overbought. 5.41% compared to the 200-day moving average. So we're about 3.4% above sideways. So that's favorable. ADX is still extraordinarily weak. So there's a couple ways to look at that. One of them is that there is not a strong trend in place. Ah, dang it. So at a 10.13 with a very weak ADX, in one case there's no reliable trend in place. But what that also means is that whichever group wins, the bulls or the bears, they're in a posture to really develop a longer term swing trend. So that's actually pretty cool. The risk Z at 1.058 says we are risk on, but the size of the risk Z at only 0.45 means it's still early in this swing trade recommended zone that it's in. So you can see at the turning point, the first one was it was selling off sharply in the fall, and then it got dangerous in here in the winter, but now it's back in the spring here, and now it's the summer. So you can see the seasonality of the risk Z, which gives information about swing trade opportunities. No signals from channeling and overreaction. I like the max pains, and I especially notice Microsoft, and I'm noticing Mexico, and my good buddies Simon Property Group and Devon Energy. So there is, and Nucor Steel is in there too. Hooray. So there's 1, 2, 3, 4, 5, and if you count Boeing, 6. That's 6 targets that I just found to be interested in preparing for day trading. You might be interested in McDonald's as a min pay. That's a relative strength leader. I like the fact that the Dow was very strong today. So McDonald's was one of the S&P 100 that was up today too. And XME, metals and mining. So there's 10 symbols. On the Dow Tactical Summary, Walgreens is at 2.6 to 1 on the auto framer. That's pretty cool. I notice Nucor Steel is 4 on the max pain range compression. That's nice. I noticed Microsoft was a big loser today. Look how different that is from the previous trend. So I think that makes it easy to buy Microsoft on a dip tomorrow. If tomorrow is up and tech is better and Microsoft is better than tech, it's Microsoft. So what did I just describe there? Oh, I just described the logic chain between market, sector, and target scenarios. So I'm already building my logic chain as I go. And if financials are going to be postured for gains, there's Travelers is 1 day ahead already. Inside the ETFs, I notice the sheer absence of signals. Oh. Real estate at 3 to 1, IYR for the auto framer. That's cool. Look at the strength in energy and the weakness in treasuries. Even though treasuries were up a fraction today, they were up 0.1. Yeah. Metals and mining, big winner. That's a possible continuation. Look at the Dow down here, UDow. Here is something made a big breakout, and that is, the Dow made a big breakout. And financials have started their turnaround with a big breakout. Continuation patterns. Look at the size of those moves in the energy sector, 4 and 3.5%. Metals and mining offered 4. Who's doing well above their own river? Walmart and Procter and Silver and Cat. If financial sector continues to do well, JP Morgan and XLF have both got fairly tight pinches. They're in the top 10 for pinches. Real estate and Walgreen, that gives you the mechanical framing data. Using the auto framer is next. Too easy. The regression line fractal framework, the top shelf, the most ATR below their RL270. So I just think Intel's been losing to NVIDIA in the chip wars, but Mexico is on deep discount. And then KRE and KBE are both regional banks, so that might be of interest if banks are going to do well. The ones that are excessive winners, Microsoft, Apple, Cisco. The daily squeezes, again, real estate, Boeing, both of interest to me. Real estate and Boeing over here. All right, so on this one, I'm looking at the Four Seasons of MACD, and today was a big, strong move up. So the ones that are leading the way are the ones that are deep in their own summers. Those are the ETFs that are winning. Here's the winners in the stocks. That's how you find symbols to day trade. Now I'm going to look at these big winners here on the 10-day and the 3-day breakouts. This one's kind of interesting. ExxonMobil and Chevron had been lagging, but today had big performances, and so did 3M. Thank you, Van. And then all of your leading candidates over here. Plus Energy and Oil Exploration. Notice that the IWM, the Russell small caps, really didn't follow through today. The very absence of joy actually tells me that there may be some guys taking an interest on it tomorrow on day one. It would not surprise me if the market was up tomorrow that the Russell 2000 was the strongest U.S. index. So let's just make a note of that one. The rest of this is market classification data. Nothing new to see there. We'll take a quick look at some of the charts you guys posted. Here's a beautiful set of katas in DIA. I think this is from Griff. I want you to notice the continuation pattern, Griff. There was another 2R available in there. And then if you stop and reverse this one, you make bank. And that's, you shouldn't even be taking that last one because you're in the last 15 minutes of the day. So that shouldn't be a thing. And then I want you to notice up in here at the Z3 pinch and the breakdown. So after you get done with the kata, you need to start looking at the Z3 pinch breakouts too. But very good technique for managing the exits on all of those. And good markup. Let's see. So this is short. I think you could reasonably sniper exit that soon. But this is the katas, to be fair. Second trade, perfect. Third trade, reasonable. Fourth trade, perfect. Fifth trade, perfect. Sixth trade, good stop and reverse. Well done. Remember to put, your total net was a scratch. I just think once you get better with your sniper, I think you're going to get a sooner entry here, so that's even better. And then you probably wouldn't stick around on that one as much. Yeah. Here's 8 trades, total in the series 9R, total for the day 18. Yeah, feels pretty good, doesn't it? And I'll just let you guys study that one. You can download it from the chat room and just enjoy a 9-hour series in DIA, for crying out loud. Here's the second set of 9 that made it an 18-day. Beautiful work in there. Here's an EWZ series. Yeah, you will learn. This is yeah. Post your names on these so I can talk to you directly. That'll help me associate names and patterns. Yeah, 3.4 gains. Or no, 3.38 SQN on the SSC and a 2.59 on the SFC. So very tradable. Put a summary in here so we can total up the. Oh, I'm sorry, you did right in there. Okay, 13. Good techniques. Oh, and I think I've ended up double clicking a bunch of these. And that was from yesterday. Okay, so that's everything I wanted to cover. Plenty of things to prepare. You guys are doing a much better job of cross-talking and sharing ideas. I wanted to show you those some of those adaptations of Kata 2 and then the caterpillar and the 10-minute frame and the 30-minute frame. Those things are working nicely. And the way Van marked up his 30-minute trading caterpillar to document Kata 2 is an important early page in his trading journal. So you got to lock that in. The most important book you can read is the book that you write. That's the point I want to make. Okay. Take good care, guys. I'm going to